you want to understand where big money is going, you need to listen to this. Understanding market structure is the foundation, but understanding where to place your entry and exits, well, that's actually mastery. In this video, I'm actually going to be talking about how to read market structure like a pro. I'm sure you've already watched how to read market structure, trending and exhaustion. I'm sure you've also watched how to read market structure, continuation and reversal. Please, if you haven't, go back and watch this video before watching this video. Now, I'll be teaching you guys how to utilize everything together and how to put them into work, especially to find what? Your entry and your exit. So come with me to the board. Well, this is actually a trade I call to my Telegram community. As usual, I always tell you guys, if you're not part of my Telegram community, you're actually playing yourself. Now, let's go to the board. All right, so today we're talking about what? We're talking about market structure mastery. Now, under market structure mastery, what are we paying attention to properly? Entry and exit. Now, from our previous video, which we talked about trending and exhaustion markets, I'm sure any single chart now that you open, you could easily deduce if this market is trending or if this market is exhausted. And also, when you open a chart, and I'm very sure you guys can actually tell if that chart is actually what? Preparing to continue to move in the direction or preparing for a reversal. Now, let's give a little analogy here, then we'll go back to the chart and break down everything properly. Please make sure you're watching this video till the end. Take your time and grab every single information I'll be giving out, okay? Now, come. Now, let's say this is the support, right? And this is the resistance level. Then the market starts moving from here. Then the market gets exhausted. Then the market breaks out, right? Then the market what? Then the market comes back, goes back up, come back to clear this liquidity, shoots back up, continues to push to the upside, continues to create exhaustion, push to the upside, continue to create exhaustion, push to the upside, then come back here, then start dumping, create exhaustion, dump, give us a consolidation, shoot back up, dump, right? Now, this is what? This is a typical market moving from what? Moving from your support level, which your demand zones can be found, to where? To your resistance level, which where? Which your supply zones can be found. Now, what do we call this movement that happened here? This is actually what? This is a trending market. Okay? What do we call this movement that happened here below? This is actually what? This is a trending market also. Now, at this point where this market was actually consolidating or giving a form of wedge formation, what do you call this part? This is a wedge. You call it what? You call it a continuation. Because why? Because immediately the market was trending, the market got exhausted, which is tired, and the market pushed back to the upside. Now, immediately the market got to this point here, what happened? The market dumped back to clear this liquidity here. Then what happened? Then the market continued pushing to the upside. This is to tell you that what? This is to tell you that this market is still trending and is still moving in a continual what? Direction. Then the market continued pushing, got to this place again, gave us what? Another continuation. Then the market pushed where? To the resistance level. Now, immediately the market got to the resistance level, what did you notice? The market gave us a continuation, pushed back up, then automatically we saw a huge reversal. And what happened again? The market gave us another continuation. Meaning what? Meaning this market has changed a trend. Before, this market was buying. But now this market is preparing to what? To start selling. And what happened? Automatically this market started dumping. This market started dumping until what? Until we saw another continuation. Then the market dumped. Then the market got exhausted. Probably maybe because the people selling here started taking profit. They were waiting for maybe a news event. Some of them were scared and they closed all their position. Then the market what? The market started consolidating. Now, when a market is moving in a sideway, we call it consolidation. When a market is moving in a wedge formation, either to the upside or to the downside, we call it what? Continuation. Now, as this market was consolidating at this point, what happened? It is telling you that this market is exhausted. What do you wait for? You wait for this market to push to the upside, clear all this liquidity here of the early sellers. Then automatically what happens? Then the market dumps aggressively. Don't worry, I'll still create a video concerning liquidity so that every single concept I'm talking about won't sound like French to you guys, okay? So I just wanted to break down how a market will move from a support to a resistance level, and from a resistance level back to the support, using what? Trending, exhaustion, continuation, and reversal. Remember, you would always spot reversal when this market is approaching what? A supply or resistance area. And you would always spot what? Continuation at the middle of the trend. Then you will always spot exhaustion when that market is preparing for a news event or the market does not have enough volatility to push it either to the up or to the downside. Okay? Now, come to this part. Let me give you guys how to get entry and exit from some of this trade. Now, when you notice a market moving like this, right? Let me take this out. Scratch this. Now, when you notice a market moving like this, before the market dumps, right? Now you're wondering, this market is trending to the downside, which is a sell, right? Now you're wondering, how are you going to enter this wedge formation? You should only sell this market. Let's say you took a sell here, right? Let's say you took a sell around this point. Let's say you took a sell around this point, right? You should only sell this market when this market is at this point here. 1, 2, 3, or 4. 4 opportunities. Don't sell at the bottom. Even if you know, yes, the market will break down, don't ever sell at the bottom. Only sell at the top. Why? Because if you sell at this part, you could put your SL above here, then you could put your TP here. But if you're selling at the bottom here, where would you put your SL? Above here. And if the market goes back up, it will take you out. So always make sure you're selling at this point here, and where your SL is a bit above it, then you target your TP 1 to 2 or 1 to 3. All right, good. Now that's that for that. Now let's talk about another entry that you would pay attention to. Now let's say a market is moving like this, right? Then you notice the market consolidating like this, then drop. Now this market was not moving sideways. Whereas this market was actually moving what? In an exhaustion phase. That means the market was actually tired. Remember, if the market is moving sideways, it's actually called what? Exhaustion. But if the market is moving either in a wedge formation, either to the upside or to the downside, that is what you call continuation. Please don't forget. Now, this market is actually exhausted because this market is moving what? In a sideway. What happens next? You don't sell here, you don't sell here, you don't sell here, you don't sell here. You wait for this market to clear this liquidity during an exhaustion phase. You wait for this market to go back up. When you see that push to the upside that clears this liquidity, that is when you should start selling. Please take notes. If the market is moving in a sideway, it is exhaustion. If the market is moving either to the upside or to the downside in a wedge-like formation, it is actually what? It's a continuation. Take note. Now, I've given you guys how to get entry when the market is moving in a continuation movement or if the market is actually exhausted. Now, let me give you guys an entry on how to take reversals. Now, let's say, for example, this market pushes to the upside, then it gets to this point. Then the market wants to start pumping. Maybe the market has been moving from here until it got to this point. Now, immediately the market is approaching this point here, right? Of course, you've already seen double top. All of you will run and want to start selling. But to trade smartly and not how every single person is trading, you have to wait for that market to push up, clear this equal high that was created here for every single person that have already started selling early. Then you what? You sell at this point and you sell to the downside. This is a perfect way to enter a reversal setup smartly. Do you understand? Now, another reason, let's say a market creates a head and shoulder, right? If you want to sell these markets, you should only sell here or you sell at the top of the head. Don't ever sell when the market has already broken down. Just forget about that trade. Do you understand? In order for you to make more money and trade smartly, you need to actually what? You need to actually see things that other people don't see. Because if you're trading how everybody will trade, if they just see double top, boom, everybody is selling, you will lose money. You see double bottom, boom, everybody's buying, you will lose money. Always wait for that market to look as if it wants to start buying, comes back to take everybody that started buying earlier or started selling earlier, then that is when you enter the market. Okay, so I've given you guys entry and exit on continuation, reversal, exhaustion, and trending. Remember, after you've entered a certain trade, always target for 1 to 2, 1 to 3. Do you understand? 1 to 2, 1 to 3, and you're good to go. Now let's move to the charts. So we'll take some real life example, because after all this, if we don't go back to the charts, you guys will still be confused. You understand? Now, all right, so let's go to the charts now. All right, so I told you guys that I'll be heading to the charts, then showing you guys how to enter a trade, especially when the market is trending, exhausted, in a continuation phase, or in a reversal. Now, come with me. This part is actually what? This is a continuation. Why is it a continuation? Because this market is actually what? This market is actually bearish. And when the market is bearish, what do we mean? This market is selling. Now, in situations like this, if you want to sell this market, this is the only place you are allowed to sell this market, at this point or at this point. After this market breakout, you have no business taking a sell here, except when the market what? Break out and come back to retest. Then you take the sell and you continue selling. Very easy, very straightforward. Please take note of that. Then another opportunity, this is for a continuation, okay? Now another opportunity is when the market is reversing. Now we noticed this market was selling aggressively. And when the market got to this point, what happened? The market changed a direction and started buying. Meaning what? Meaning a reversal happened here. And what can we see here? This is the left shoulder, this is the right shoulder, this is the head. Meaning what? Inverse head and shoulder. And when you see inverse head and shoulder, where do you want to take an entry? Either at this point here. Well, if you're not a magician and you're not able to see this, probably because you've not learned demand and supply, then you can actually enter from this point here. At the what? At the right hand shoulder. When the market comes back to retrace here, you place your entry here. And where do you take your profits? 1 to 2 or 1 to 3, and you're good to go. Now, I've given you guys a practical way of entering the chart when the market is in a continuation phase, or when this market is actually what? When this market is actually what? In a reversal phase. Now, let's see if we can find when this market was actually exhausted and all of a sudden the market what? The market still pushed in the same direction. Okay, now let's see if we can find, okay, now an example is this. Great, this is an exhaustion phase here. We can actually see that this market was actually what? Consolidating. Now, as this market was consolidating, you have no right selling this market at this point until this market spike up to take out everybody here, in the sense of what? Clearing liquidity. Then what do? You take your sell from that point. Very straightforward. Everything I've been teaching you guys is actually practicalized on the chart. If you pay attention to what I've been teaching you guys, go back, watch market structure 1, trending and reversal, trending and exhaustion. Go back, watch market structure 2, continuation and reversal, then come back to watch the final market structure video, entry and exit. And with this information plus key level plus my liquidity video, you've already conquered 2025. Then imagine if you learn fundamental analysis. For those of you that have been asking for the online mentorship back to back, don't worry, an announcement will be coming on the 1st of July, on the 1st of August, and we'll see where we can actually move from there. Okay, thank you guys so much, and I love you guys. I remain Okwantoni Uche, also known as Tony Sniper. Peace.